How to evaluate real estate markets for investment. In this video, you're going to learn 7 critical factors to look for before choosing to invest in a market. Now, I'm going to be upfront with you and tell you that I do not profess to be a real estate investing guru, but I will tell you that I do have a real estate investing coach, and these are the 7 critical factors that he advised me to be looking for when I am looking to invest in a particular market. So I just wanted to share those with you. But what I do know a lot about is how to do this type of research online. And I'm going to share with you a free website that you can use so that you can apply these factors in your research. Now, the first factor we want to be looking for is an increasing population growth. You know, the more people we have moving into a particular town or a particular market that we're going to invest in, that means there are more potential tenants and there are more potential buyers for us if we're looking to flip the property. Naturally, in a situation like this, the demand for housing is obviously increasing with more people coming in. And not only that, with more people coming in, we have a much better chance of appreciation, again, since the demand for the housing is going up. The next thing we want to look for is a strong and diverse economy. We want to invest in places where there are multiple sources of jobs. If there's only a single source of jobs, then we increase our risk, because if something were to happen to that one company or that one sector or whatever you want to call it that's providing all these jobs, we could be in trouble. The next thing we want to look at is infrastructure and improvements. We want to look for highways, airports, and whatever mass transit that we have. Ideally, the government should be pro-growth, and it would be nice if they were landlord-friendly as opposed to tenant-friendly. That's one reason myself why I like to invest in states like Florida, because it is a very landlord-friendly state compared to if you look at California, which is more like home here in Ontario, Canada, where I'm from, where the laws favor more the tenants than they do the landlords. So since we're on the landlord side of the fence, it would be nice if the laws favored us. The value of the marketplace is another thing we could look at. We want the median home price to be about 4 times the annual income. So if the median price of the home is less than 4 times the annual income, then it's good value. Otherwise, we deem it to be overpriced, and there are probably better places we could be looking for. The vacancy rate is another important factor. That's number 5. Ideally, our vacancy should be less than 10%. Now, these days, because of the high foreclosures, you may find that the vacancy rates are a lot higher. So we need to understand why that vacancy is over 10%. So if there are a lot of foreclosures, that may be why there's a lot of empty housing. Whereas if there weren't a lot of foreclosures in a particular area and the vacancy is high, then it's definitely an area that we want to be staying away from. And you can confirm these vacancy rates with property management companies and other real estate investors in that area. Number 6 is we want to provide what the majority are looking for. So is the property that we're looking to invest in, does it have what the majority of the people in that area want? And what we mean by that is amenities and parking and stuff like that. So for example, if the majority drive cars in the area, then you want to make sure that your property has sufficient parking. Number 7 is the retiree hotspot. Now, this is actually more of a bonus rather than a must-have. If we have more retirees wanting to come into that area, then that means we're going to have more potential renters and buyers. And optionally, you could also rent your property seasonally if retirees tend to go down there. Now, to do this research online, the best site that I like to use is bestplacesnet. Now, the information here might be dated at times, but once again, it's a good starting point to start doing this research. And of course, BirdDogBot automatically links into bestplaces.net. So let's hop over to bestplaces.net right now, and I'll show you what this site looks like. So here we are at bestplaces.net. Like I said, this is my favorite site to use to evaluate a market. So why don't we go through the 7 factors that I showed you and how you can gather that research from bestplaces.net. So let's just go to Fort Lauderdale, Florida, for example. You just enter in the city name in that search field, and from there it'll try find it, and it has found it right here, Fort Lauderdale, Florida. And as you can see on this page here, we can get a whole bunch of information about Fort Lauderdale, Florida. There's some rankings up here. Number 1 hurricane hotspot, that's great. And this is the main area we want to be focusing on right here, is that's where all this information is categorized quite nicely for us. So let's go through those critical factors that I had told you about earlier. So if you remember, the first one was an increasing population growth. So right away on this homepage for Fort Lauderdale, we can see that it's got a population change of 4%. Now what we can also do is, if we want to get a little bit more information, if we click on people, we will see right here that the population change is exactly 3.89% compared to the US average, which is 9.34%. So right there we can see that the population is going in the right direction. It's not growing as fast as the United States as a whole, but at least it is moving in the right direction. The second factor we wanted to look at was a strong and diverse economy. So we wanted to make sure that not all of the jobs were all in with one company. So for that, we could actually just click on economy, and there we'll get all sorts of information about what their incomes are. But down here is what we want to look at. Here's population by occupation. We'll notice that 15% are in management or business, 19% are professional or related, 20% in service, 25% in sales and office, and down the list. And what we can also do is, once again, compare that to what the national average is. And you can see here it looks like it's fairly uniform, all things considering, with the national average in the United States. So that looks to be like a fairly diverse economy, if you ask me. The next thing we want to look at is the infrastructure and transportation. So what we can do there, we can take a look at the transportation section, and here it will show us how people usually get to work. Now, I know this isn't going to tell us much about how good the public transit system is, or highways or whatnot. That's something that we could obviously look up in Google or something else to know if there is an airport, for example, close by, if there are any highways. So back to the transportation tab. What we see here is the majority of the people in this area are driving. We've got 73% of them, it looks like, drive alone, plus another 9% carpool, and only about 7% of them are using mass transit. Now the next thing we want to look at is the value of the marketplace. This is a really good one to take a look at. So if you remember, what we were looking for is we want the median home price to be less than 4 times the annual income of the person. So let's take a look at housing. So we'll click on housing, and we will see here that the median home cost is roughly $280,000. So if we use our 4x formula there, that basically, $280,000 divided by 4 is $70,000. So ideally what we want is the median, or the average income of the people there, to be making at least $70,000. So we could do that in a couple ways. One, we could, let's go over to the economy tab. That's where I wanted to go. Right, this will show us what the people are earning in that area. So to get to 70,000, we're down to about this line here. So everybody from here on up is less than our range. So we're looking at, let's see, the 10 plus the 9 is 19, plus another 4, 23, and 5 is 28, and another 1 is 29%. So we're looking at only about 30% of the people there are over that median home price number that we're looking for. And if you scroll down a little bit more down here, you can find a little bit more information. So here we can see the median household income is $49,000. Now we wanted that to be about $70,000. So it looks like in this area here that the housing seems to be a little bit more overpriced than what we would be hoping for. Now that doesn't mean to say that there are no good deals in Fort Lauderdale by any means, but just again, when we're just evaluating the market as a whole, it's something for us to look at. Let's take a look at the vacancy rate by going to housing. Vacancy rates, as we remember, is number 5 on our list. And here we'll see that housing vacant is at 18%. Again, ideally, we would like that to be 10% or lower, which seems to be in line a little bit more with the US. But again, this could be because of the high foreclosures. We know that Florida was one of the real estate markets that was hit pretty hard, but that's not just trying to make an excuse for Fort Lauderdale. I mean, again, this is something that you're going to want to verify with property management companies or other real estate investors in that area. So again, on the surface, this does look high, but again, just because we're in such a weird economic times right now, we got to find out why is this so high at 18%. My instincts are kind of telling me that it's probably due to the foreclosures, but again, that's something that we will want to verify. The next thing we wanted to look at is we wanted to make sure that we're providing what the majority are looking for. So again, that's one of those things that you have to think a little bit creatively about. But in the example we used, we were talking about parking. So let's see if parking is relevant here. Back to the transportation tab. As we mentioned earlier, it looks like 73% of the people drive, another 9%. So now we're looking at a total of what is that? 82% of the people are in cars right there. So that would tell me that it's probably a good idea that whatever property I get, there should be some parking there, especially if it's like a multi-unit complex or even a condo or something like that. Make sure that you're going to be getting parking because, again, 82% of the people are driving cars there. And the last one, which was the bonus, was the retiree hotspot. It probably doesn't take much research to figure out that Florida is probably a good retiree hotspot. Florida, California, probably Arizona, all of these warm places. I mean, I don't know too many retirees whose perfect vision of retirement is in somewhere like, I don't know, like Minnesota. Not that there's anything wrong with Minnesota, but usually they probably are going to want to go somewhere where it's warm and they don't have to shovel snow and that kind of thing. So that there is a brief intro to bestplaces.net. Again, it's a great site for getting all kinds of information all in one place. Now, when you're in BirdDogBot and you want to do this type of research for that market, all you need to do is go to your My Deals list and click on one of the properties. Then on the property's pro forma page, scroll down to the resources section and click on the bestplaces.net link. And it will take you right to the page on bestplaces.net for that particular zip code so that you can begin doing your research. So that's a nice little feature to save you having to manually go to bestplaces.net and dig for that area. You can just jump straight there and begin doing your due diligence on that area. And that is how we quickly evaluate a market using one of my favorite websites, bestplaces.net. So if you have any comments or there's anything you'd like to add, please do post a comment below this video. I'd love to hear what you think. And if you're not already a BirdDogBot subscriber, come check us out at www.birddogBot.com. Thanks for watching.